small saving schemes, and what is it that you have to do in order to avoid your small saving schemes account getting freezed by 30th September? And also, is this the time for you to look at corporate FDs? All this and more in discussion with Shweta Rajani, Head Mutual Funds, Anand Rathi of Wealth Limited. Shweta, good evening and welcome to the show. We have a lot to discuss today, and let's begin with small saving accounts being freezed. Now, there's something that you need to submit, which is your Aadhaar card, and you've got to link your small saving account with Aadhaar, and only if you do this, your account will be operational. Is that right? Is that the news that's buzzing right now for small saving schemes, Shweta?
Good evening, Kavita. You're absolutely right that, on 31st of March, the Ministry of Finance released a regulation which said that in the next 6 months, and which means by 30th of September, you have to submit your Aadhaar number, link it to your small savings schemes so that it does not get frozen. And when I say small savings schemes, what we are talking about is your PPF, NSE, post office savings schemes, senior citizen savings account, Sukanya Samriddhi. Those are your small savings schemes. So yes, the deadline is approaching. You have another 20 odd days to go. You have to get your Aadhaar linked to these accounts so that any future payments that you have to receive, your interest payments, your maturity proceeds, any payments that you would be making into your PPF account or the Sukanya Samriddhi account does not get impacted.
Uh, any consequence of not linking your Aadhaar and if you miss the deadline?
Yes. So, like I said, what would happen is your account gets frozen, which means that you cannot do any further transaction in that account. So, if you have, let's say, a quarterly interest or a half yearly interest coming after 1st of October, that would stop. If you have your NSE maturing, that maturity proceeds would not get credited to your bank account. Third implication for this would be, if you are doing your annual uh, PPF investments, that you cannot do. So any deposit into the account or any credit that you have to receive into this account would not take place if your Aadhaar is not linked.
All right, Shweta, also, what would be the process to do that? Do you really have to physically go to the bank branch or the post office branch?
Yes. So, Kavita, if I just give you numbers, in India, we have 35 lakh crores, which is invested in these small savings accounts. And that is, according to the RBI data, almost 11% of the household savings. And it's spread across uh, tier two, tier three, tier one cities. So, in a lot of places, you may have to go visit the branch or the post office to get your Aadhaar number linked. In some places, yes, wherever it is linked to your bank account, you will have a net banking. You can do it there too. But I'm afraid in most cases, you'll have to go there and get this linked.
All right, let's move on to a different aspect of discussion. And again, it's about small saving schemes. And the investment, in fact, is at a 11 years low, if I'm right, Shweta, because, and that is despite the interest rate on selected small saving schemes going up. Okay. We all know that the interest rate is reviewed of small saving schemes every quarter. And looking at the interest rate scenario right now, there are selected small saving schemes where we've seen few PPS increase. But despite that, there has been a low investment interest among investors. What could be the reason?
You're right. So, if I break it up, prior to 2020, we were seeing almost a 30% increase in these small savings schemes. Till 2022, we were almost seeing a 10% increase in the investments that were going into the small savings schemes. Last financial year, there was a degrowth. So, to give you certain numbers, in 2022, if the net inflow was around 3,33,000, last year, 3 lakh crores, 3 lakh has, kind of gone into these small savings schemes. What we are seeing is that over the last few years, the dependence on these low interest generating but kind of guaranteed return instruments was high. But there is a shift in the investor behavior and investor sentiments. We are seeing a shift that's taking place towards equities. If I give you, corresponding numbers for SIPs, uh, start 2022, there was 11,000 crores of monthly SIP going in. By the time we ended April this year, it was 14,000 crores of monthly SIP. As we speak, it's exceeded 15,000 crores of monthly SIP going in, which is showing the shift of, willingness to take some more risk on the portfolio, uh, uh, initiative to have a decent asset mix in your portfolio. This is leading into money flowing from small savings debt towards equity. Fundamentals are in place. There's a lot of initiative that's being taken in terms of investor education, awareness of equity as an asset class, mutual funds as an instrument. That's kind of leading to this shift.
All right, let's move on. And going ahead, despite one last question on the small savings thing, Shweta, despite the current interest rate that one can see, selected small savings that you might want to recommend or advise investors to have exposure in, just to balance out the risk or the rule of diversification that they might can opt by adding one of these instruments in their portfolio.
Absolutely. I'd say if you're a senior citizen, then you have your senior citizen savings scheme, which is at 8.2% of an interest rate. That's a very good instrument to have, especially if you're in the low interest income bracket. Then I think that's a good option. PPF at 7.4% interest rate. That again is another good option. So utilize it to the full limit, 1.5 lakh per year. That's allowed to you. I think this would definitely be two tick marks that I would suggest.
All right. With that, let's move on to our next very interesting topic, which is on corporate fixed deposits. And it's the right time maybe to look at high interest rates on fixed deposits. But even now, when we talk about corporate fixed deposits, what are the kind of interest rates which are being offered?
Yeah. Just to give you certain ballpark numbers, if I am looking
Sure.
at a AAA corporate FD, that's offering somewhere around a range of 7.25 to 7.75. A very select few offering 8. If you go in for a AA rated FD, and just as an example, I'm giving a name, a Shriram Transport corporate FD, for a 3-year tenor would be offering somewhere around an 8.25. And these are all 3-year rates. 1 year would be somewhere around 7 to 7.25. That's the kind of rates that's being offered by corporates. Comparison, if you look at a government paper of 10 years is available to you through via a debt fund at 7%. So your differential between what a government paper investment and what a corporate FD would give you is closer to a 1% per annum at this point of time.
What are the basic criteria that one should be looking at, especially talking about the risk factor that a corporate fixed deposit might include, if anything that you would want to highlight to our viewers?
Yes, definitely, because corporate FD is while from a return standpoint, it gives you a stable return. So there's a stability that if you've entered at 8%, you're going to get 8% per annum. But there is a risk. There's a credit risk that you need to worry about, right? The default risk is always there, which is where you're getting that 1% premium over a government paper. Second is your liquidity risk, that if you've locked in, you'll have to pay a penalty. If you have to exit before that 3-year tenor, some FDs may not even allow you a premature withdrawal, but if the premature withdrawal is allowed, then it could be a penalty of 1%. So that's something that you need to keep in mind. Credit rating of the company needs to be looked at. What has been the historical track record of payment of interest and maturity of that company should be looked at. To my mind, a 1% premium may not be such a significant premium for you to consider a corporate FD over a government paper. So you'll have to look at, where that balance is coming in, because this is pre-tax. You also have to, not forget the tax implication, because if you are in a high income bracket, then an 8% pre-tax is kind of saying it's 5.5% post-tax for you. So you have to keep that in mind too when you're considering corporate FDs.
Right. So I think that will be all as far as topics concerned with your financial planning. We'll be discussing more on this, but then let's get our viewers on the phone line with us, Shweta. I have Mr. R. Reddy online with me. Mr. Reddy, hi, good evening. I believe you're from
Good
Sikandrabad.
evening.
Thank you so much for sending us
Yes.
your question, sir. And
Thank you, ma'am.
you want to know about Motilal Oswal Micro Cap 250 Index Fund, is that right?
Yes, madam. Recently, I think it has come. So I was just
Sure, yeah.
seeing its profile in the last 2 to 3 months. It has grown about 20% or so. That's a very short time.
Okay.
So how would it be for a medium-term investment? I just wanted to know.
Sir,
as
are
I
you
was
a
watching
high-risk
your
investor? Sir, are you a high-risk investor?
I don't mind. I don't mind that risk about 5 to 10
Okay.
lakhs keeping also, and I can take that risk.
Okay, so are you aware of the risk involved in this particular category and what all company comes under the micro cap sector? I mean, I just hope that you've read about this and
Yes,
gathered
madam,
enough
that is
information to take that risk.
251 to 500 in the ranking
Right.
wise. I think range is around 100 crores to 500 crores is the market capitalization.
Right.
That's what I
Okay.
have seen.
Okay.
So, and I have
You
also
have a
seen one or two projects.
Sure. Otherwise, you have a financial portfolio on you where you have mutual funds. I mean, I'm just asking from a diversification
Yes,
point of
madam.
view. I hope you're well diversified.
Yes, madam. Well
Yeah?
diversified.
Okay.
Small and
Sure.
mid, large also is there. I just wanted
Sure.
to put some amount in the micro cap and
Got it.
what would be the expert opinion. That's it. Otherwise,
Got it.
it is not the only one which I am interested in. I have
Oh,
something
lovely.
on the large,
That's the
something
main
on mid,
concern,
and
yeah.
something on small. Yes, yes, yes.
Yeah,
Yes,
yeah, yeah,
ma'am.
yeah. Sure,
If
okay.
that
So
is
I
easy,
think you're a you know, it's not always that we get an investor, a knowledgeable investor like you, and it's very nice to have such an investor as our viewer as well. Shweta, I hope I made your job easy. What would you recommend?
Absolutely. So, Mr. Reddy has also done a little bit of his homework here. Mr. Reddy, I'll just highlight 3, 4 points over here for you. One, you said 251 to 500. That's the definition for small cap. So below that is where your micro cap starts. That was, just one thing I wanted to highlight to you in terms of clarification that there's large cap, mid cap, small cap, which is covering your top 500 companies, and then you have your micro cap starting. So in the last 4, 5 months, you're right. The small cap index or the entire segment has gone up by almost 30%. And that's mainly to do with valuations being attractive, good earnings expectation for this segment. That's led to the run up. Is there a further potential? Looks like there is a further potential. So the segment would be good to participate into. However, you mentioned an index fund. Now, in the mutual fund space, our experience has been that an active fund has a potential to outperform the index by easily over a 2-3% on an average over a longer tenor. So going by that, I would say if you want to participate in the small cap space, yes, up to 20-30% of your underlying exposure can go into small cap. I'd be more, I'd say, recommending towards small cap than micro cap, more towards active fund than an index fund at this point of time. So if you want to participate, rather than the index, I would suggest you go in for active schemes like, maybe an HDFC small cap and Aditya Birla small cap. There also, where they are investing is a mix of so-called, the smaller cap space, the smaller market caps as well, and they have a decent track record. So my recommendation would be these two schemes for you.
All right. Is there anything else, Mr. Reddy, you want to ask Shweta?
Can I just add one thing if you have time?
Okay.
Madam, as she has suggested, I have in the active fund invested something in small cap and mid cap, some amount in large and mid cap. So all
Okay.
these three categories are covered. Now in the micro cap, only index fund is there. So after completing this, now I just thought, can I put some amount in this? As she has suggested,
All right.
I
So,
have
which
put
is
in
why
active
we
fund.
always insist, which is why we always insist our viewers to give us their complete portfolio, because just asking about
Yes,
one
yes.
fund,
Yes,
it's always
yes,
difficult for an expert to recommend.
yes.
So, I believe, Shweta,
Okay.
anything you want to add to your answer?
So the schemes that I recommended, Mr. Reddy, will also have some exposure to these smaller market cap companies because they are allowed to invest anything which is below the 251st company. So, they'll have those 3,000 crore market cap companies as well in their portfolio. They'll have 10,000 crore market cap companies also in their portfolio. So you'll get an exposure to micro cap as well, but not 100% going into the micro cap space, which will help you balance your return and risk grid.